Hello, everybody, and welcome back to another episode of Adam Bergman's Moneymakers, where we talk everything finance and as it relates to our own personal growth. But ain't nothing happening about personal finance growth today. Everything sucks. Everything is in the red. Yesterday, we got a comeback after Jerome Powell spoke. On Friday, we got absolutely obliterated. Guys, this market is just tap out. You know, everyone's getting choked out. Tap out. People are just giving up. People are selling. People had enough. We are definitely in the midst of a recession. I would put money on it that in quarter three, we will get results that we are currently in a recession. Why? Quarter one GDP went down. Quarter two, we're currently living it. And I believe that it also went down. Everything sucks. Let me read you a couple of articles. Let me try to make sense about what's happening. But at the end of the day, all I know is I am not selling unless I have to. I'm able to recover some funds and putting it in because I do keep getting margin called, but I am bringing funds in left and right to cover my margin calls, and I'm okay. I only had to sell a little bit. Why? I just know one thing. I'm going to let you know that at the end of the video, so stick with me. Dow Jones, S&P 500 slide more than 3% as investors reassess the Fed's comments. Technology-related shares drop sharply, pulling the Nasdaq down 5%. Nasdaq is getting obliterated. Stock market took its biggest U-turn since the early days of the pandemic Thursday, with the Dow Jones Industrial Average posting the largest decline this year, just 24 hours after its largest gain since 2020. So we gained yesterday and we dropped today, but today's drop is definitely by far worse than yesterday's gain. So not only is it a wash, but it's a wash plus some. The reversal wiped out the euphoria that reigned on Wall Street Wednesday in the wake of the Federal Reserve Chairman Jerome Powell's comments that the Fed wasn't actively considering a 0.75% rate in the future, with inflation at its highest level since the early 1980s. Over 40 years, 40-year high inflation. The market has been anticipating such an increase, and the prospects of a slower rise in rates set off a furious buying spree in the late afternoon. The optimism behind that rally was long gone Thursday when selling was widespread, though most intense in the technology shares have fallen in hard times in 2020 after years of leading the market advance. Now I'm going to read you some of this, and it pisses me off. Tesla, 8.3% drop. Amazon, 7.6% drop. And it's not mentioned over here, but Palantir, near 10% drop. Tesla, $0 in debt. Palantir, $0 in debt. Not one of those companies needs to borrow money. What the F does it matter if interest rates are going up? None of them are dependent on interest rates. And this is some of the psychological things that I just don't understand. I mean, I understand it, but I just don't understand the broader market. I understand retail investors, I understand institutional investors. I just don't understand people selling all this tech, thinking that tech is gonna get dragged down because interest rates are going up. No. Companies, not the tech sector, but companies that need to borrow money, companies that are not profitable, companies that need to rely on banks and interest rates, which then cuts into their bottom lines, those are the companies that are in trouble. I don't understand it. Tesla down? They don't need money. They're a growing machine. Palantir down? Palantir has government contracts that are freaking growing left and right. And they have commercial contracts that are growing left and right. You don't even know a half of the companies that Palantir is working on. Not even a half. I think it's even less than that. Are you guys absolutely insane? Amazon, they had a absolutely terrible earnings. However, they're at a 52-week low. Do you think Amazon is worth more today than it was a year ago? I don't know. You guys tell me. Do you think Palantir is worth now more than it was a year ago? Abso-freaking-lutely. And do you think that Tesla is worth now more than it was a year ago? 100%. Now, Tesla is not at a 52-week low. It's right around the mid-level. However, it's 30% off of an all-time low. So do you think that today Tesla is worth more than 30% than it was 1 year ago? Yeah, it is. It's delivering crazy numbers, and they have a lot of growth to come. Bro, they're gonna have a robot, literally an iRobot, that's gonna do everyone's job for them more efficiently, and the jobs that people don't wanna do. Jerome Powell literally just said that there's a 1.9 to 1 Job ratio, 1.9 vacancies, while only one that wants to fill the jobs. You don't think that a robot like an iRobot is gonna solve a lot of this? You don't think that this might be bigger than Tesla's entire car market? And somehow Tesla is only worth 30% more than it was a year ago? Amazon, forget about a 52-week low. Look at this. Amazon was at this price approximately in June 15th, 2020. Amazon is nearly at a two-year low. And you're trying to tell me that Amazon is not worth more than it was 2 years ago? Think. Their cloud business is $1 trillion business. Their online retail is $1 trillion business. Their investments in other companies is $1 trillion business. Whole Foods, $1 trillion business. They're a multi-trillion-dollar business. If they were broken up because of monopoly, man, this would be multiple trillions. It's currently trading at $1.1 trillion. Let's go back to Palantir. 52-week low. 52-week low. Current market cap, 21 billion. A couple of quarters ago, Palantir had a sales force of 25. Now Palantir has near a sales force of 100. Palantir just locked up a $90 million HHS contract. Palantir is bidding and probably will get a over $300 million NHS contract from United Kingdom's Health. You think it's not worth more than it was a year ago? Are you freaking kidding me? And I quote, the market yesterday was a relief rally, said Seema Shah, chief strategic at Principal Global Investors. By Thursday, she said the realism of a more challenging environment for stocks were starting to settle in, including higher rates, difficult earnings comparisons, and the stronger US dollar that weighs on overseas earnings in multiple firms. The unease is amplifying the tendency of many investors to sell some shares into market rallies in a bid to rebalance portfolios that many have become too concentrated in shares of firms that benefited the pandemic-era stimulus. Again, pandemic-era stimulus, Palantir? No, sir. Pandemic-era stimulus for Tesla? No, sir. Pandemic-era stimulus for Amazon? Nope. Some companies needed the stimulus. Some companies did not need the stimulus and didn't benefit from the stimulus. You think people getting a $1,400 check are going to buy a Tesla? Or they're going to go and make a $6.5 million average base price for a Palantir Foundry platform? No. Maybe people that got $1,400 spent a little bit more on Amazon. Maybe. But that definitely didn't affect their cloud business. And I don't think it really affected. You think the $1,400 affected Amazon? The retail business and Whole Foods, yes, but it didn't affect the cloud business, which is the strongest sector of Amazon. Guys, I could tell you this. The worst starting quarter in history for stocks when it comes to tech, NASDAQ, things like that. The worst day in stocks for nearly 2 years was today. I want to give you another statistic. Most stock bear markets, which is a 20% or more drop, happen during recessions. Of the bear drops that I saw off the top of my head that lasted for over 1 year, they always were accompanied with a recession. I believe currently we have a recession. How long is this drop going to last? I don't know. How long has it lasted? I believe that this started at the end of last year, somewhere around December. This is a 1-year NASDAQ. Currently, we are at nearly a 52-week low. Again, you think the whole tech sector is worth less now than it was a year ago? Yes, it was accelerated by stay-at-home. But there's some amazing companies that are really changing lives. But I won't talk about them. Let's concentrate on Tesla, Palantir, and really, really good companies. Let's concentrate on this 6-month right here. Currently, we're at the 12,300. When did we actually start dropping? Right around this point right here, which was at the end of December, and we were right around 16,000. So 16,000 to around that 13,000 mark. So we're down approximately 20-something%. Let's go back 5 years. This right here is right before COVID happened. Our price was right around that 9,500, something like this. This was February 17th of 2020. Currently, we are at $12,000. How much more you think we got to drop to get to pre-COVID levels? We still got around a 2,500 or so. 2,500 is probably another drop of around 20%. So we have another 20% to go to get to pre-pandemic levels. Approximately, guys. Don't kill me. I'm doing this off the top of my head. Eventually, the bleeding will stop. I promise to tell you my view on this at the end. This is the end. It sucks. And no charts that I read this entire time, nothing that I said is going to make you feel better, no articles from Wall Street Journal, nothing. Everything sucks. You want to pull your hair out. You want to go outside. You want to scream. I literally made myself a coffee earlier. I drank it. I took myself a nice big piece of cake. I put some whipped cream on that baby, and I chomped it down. And it was good, and it made me feel better. And then I try to figure out how to get some more money to cover my margins. At the end of the day, you stick with your conviction plays. Nothing I say is financial advice. Everything is purely entertainment and educational purposes only. But just remember what I said. A lot of these companies that are down right now or at 52-week lows, and you guys can talk about any companies you want. I know I talk about Tesla, Palantir, Amazon, because I know those companies off the top of my head. But a lot of companies, you got to really dig deep and look into the companies that you have and ask yourself, are the companies better today than they were a year ago? Are the companies better today than they were 2 years ago? Are the companies better today than the last time you see the price of today? You got to ask yourself that. Did the fundamentals change? Is the company growing? Do they owe money? Do they need to borrow money? Do they have a moat around them? Do they do something really amazing, special that is going to change the world? And if your answer is yes, 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 well, what do you think your answer should be? Should you sell? Or should you be buying? Or should you hold and do nothing? Figure out your own answer, because only you can answer that. But just think smart. Eventually, the market stops bleeding. I don't know when, but I can tell you that in every single drop in history of the stock market, no matter what, it's factual, market always came back. It might take a few months. It might take a few years. But at every single huge market drop, the market always came back. Personally, I see another market drop of around 15 to 20-something%, which would get us pre-pandemic levels. Now, I'm talking about specifically the NASDAQ because most of the stocks that I invest in are technology stocks, growth stocks, which are all part of the NASDAQ. You guys can do your own research. I hope you enjoyed this video. Just trying to make some sense of it and just think logically. All these charts, all these articles, yeah, you can read them until, your face turns blue. Until you have no more strength to read, until you pass out from reading so much and analyzing with a chart. Fibonacci retracements. At the end of the day, you cannot time a market. You can't do that. What you could do is be logical. And even at best, when you're logical, like the best, you still can't time the market. And sometimes you don't even come close. I thought that at the end of last year, when things started dropping, that was a big drop. I was wrong. Okay. So I had plan Bs, plan Cs to make sure I have enough money not to get obliterated through margin calls. I got margin called a little bit, but I'm finding ways to pay off the margins so that I don't get called. Why? This thing can skyrocket tomorrow, or it could not. It could drop more. Palantir, earnings on Monday. Also, this is going to be Russian Victory Day. I think Palantir is going to get demolished, obliterated. Unless we have some unbelievable news, Palantir is getting wrecked. Absolutely wrecked. Tomorrow is Friday. I think stocks will go down tomorrow as well. There's really nothing that's plugging this hole. There's nothing that's going to patch up this bleeding. Nothing. There's literally nothing. Jerome Powell literally says that he's not going to raise the 75 basis points. And everybody was excited. Then everybody reassessed. There's nothing that's going to change the situation unless the CPI report comes out and we get less than expected inflation. That's the only thing that can happen. And in order to do that, it takes time and it takes a decrease in bottlenecking. It takes an increase in supply, which we know that's probably not going to happen and just wishful thinking. Which then leads you to think, how the hell do companies like Tesla still beat everything, still beat expectations? Because they plan. And if you're planning, you're going to be okay. But if you fail to plan, well, you're planning to fail. You guys know how that goes. I think you need to have your conviction plays, stick with your conviction plays, and that's it. Sit tight or double down on your conviction plays. Guys, there are massive opportunities in the market right now. I know I say this a lot, but it's true. So let's say you're buying something at $100 and you think that it's going to go to 200 in the future. Well, your return on investment is 200 divided by 100, 2. That's your return on investment. But let's say this drops to $50. Well, now you still think it's going to go to 200. Nothing really changed. So you take 200 divided by 4. Now you take 200 divided by 50. And your return on investment is no longer 2. Your return on investment is 4. The lower you can get in, as close as possible to the bottom of the market, obviously, the larger your returns. Who knows what the bottom is? I don't tell you I know. I'm not a guru. I lose money as much as you guys lose money. Probably more because I have larger positions for the most part. Unless you meet Kevin, he has the largest positions. Guys, thank you so much for watching. Please give me the likes, the shares, and the subscribe if you're feeling this type of channel and you're feeling this type of videos that try to make sense of this absolutely nonsense, crazy, no sense, no logic about it type of market. At the end of the day, people are paper handings and they're tapping out. They're scared. They don't know what's going to happen, and they have no conviction. But as easily as the market drops, the market could also recover. Thank you so much, and have a great day.